Amber Enterprises is a stock in focus because the company posted a really remarkable set of numbers, 81% uptick in revenues. On that base, on that business, for margins to expand 40 basis points is interesting. Net profit of 20.9 crores, the estimates for 3.5 crores. Jasbir Sigh, Executive Chairman and CEO of Amber Enterprises, joins us. Mr. Singh, it's been a really long time, but good talking to you again. This is Neeraj here. Good morning. Thanks for joining in. I hope all is well.
Good morning, Neeraj. Thank you for having me on the show.
The pleasure is entirely ours. So put the quarter into perspective. Yes, the estimates were strong, but you've beaten estimates by a handsome margin. Did some order or execution get preponed, or is this the sign of things to come?
Well, we've been working on diversifying our portfolio, both in consumer durable, electronics and railway applications. And I think that is fructifying now, that is showing the results. So what we are looking at this quarter is the result of the hard work team has done in last 3 years. We have added some more customers. We have added some new products in all the divisions. And that's where the positive growth is coming from.
Well, okay. So please highlight what's gone behind this kind of uptick, both in Q2 as well as H1 maybe. And what does this mean, therefore, for the whole year for Amber Enterprises? And let's start with FY25, then we'll move to the longer term.
Well, I'll talk to you about the 3 divisions. In consumer durable, what we have done is we've added some new customers. We've also shifted some product portfolio. So we have added tower air conditioners, we've added cassette air conditioners to begin with. And also we begin the washing machine business and commercial air conditioner business. So all of them has been added, and now it is reflecting in the top line. On the electronic side, we have basically we've acquired Ascent Circuits, and in the application of PCBAs, we have graduated from consumer durables to wearable. We've added telecom, and we've also added automobile customers very recently, and smart meter customers very recently. So all this is fueling the growth in both the divisions.
So hi, it's also Samina joining in. One vertical that unfortunately has seen a degrowth is the railway segment, where revenues were down 6.3% YOY. But of course, I believe you're confident that there will be improvement, but it will only happen in FY26. You want to tell me what went wrong here and what is the growth trajectory? Will we see a big swing on the railway vertical? Because if you're firing from all cylinders, this is what you need, right?
Well, Samina, on the railway applications, we are very bullish. We've added a new product portfolio. We've added, apart from air conditioners offering, we have now added doors and gangways, and we've added pantry systems. Plus, we have done joint venture with Eugene of South Korea for gear couplers and pantographs. But all this is basically now getting built. The factories are under construction. The new factories will be up and running by next year. And we expect from Q4 FY26 onwards, we see a J curve in railway division. So there's a bit slowdown on the Vande Bharat order book because of the changes in the formation of the coaches. And there's a delay in one of the metro projects also. But nothing changes on the outlook of Amber Enterprises Railway Division. So we are very bullish. We have guided. I would like to reiterate my guidance. We will be able to double the revenues in next 3 years. And we see a very positive growth of railways coming in. And we are also endeavoring our offering in the export markets in the Europe and US market, which will be also reflected in coming years to come.
You know, Mr. Singh, I want to talk about how fantastic it's been, right? And of course, it's so good to hear that you're giving us such an optimistic guidance. And also on the margin front, right? You've maintained that you're expecting margins to only improve from current levels. Where is that going to come from? Is it going to be on better portfolio mix? Is it going to be operational efficiency? Is it going to be the fact that exports will increase and that may contribute to your margins? And also in the EMS segment, you've specifically said that margins there too will double by F530. You want to tell me and give me a color, throw some color, give me a sense of timeline, and of course where blended margins could stand by say F526.
I'll speak to you about the 3 divisions on the margin front. In consumer durable, we've added more components, which has which has increased our margins, and we are adding some new product categories, which is a better margin product category. On electronics, when we acquired LG Electronics, when we started actually electronic vertical in 2018, this was a small 300 crore business with about 2.8% EBITDA margins. And we are seeing we've already touched 7.75% now, and we are expecting further improvement in the margins because of the reason that we have added applications. We started our applications from consumer durable, then we added hearable wearable, and then we added telecom and smart meters, and now we've added auto customers, and now we've just got the first orders from the defense electronics as our first order. And on the backward integration side, we added PCB, which is a better margin business for us, SN Circuits. And recently we have done a JV with Korea Circuits, which will also expand our margin because that is a very technologies heavy HDI boards, which we are going to bring in India. It is complete import substitution. And on the railway application, we are already maintaining 22% of EBITDA. So all blended basis is giving us this growth on the margin side.
So do you have two Korean JVs? The Korean Circuit and Amber Group have announced the JV this quarter. Is there something else as well on the railway side? Sorry.
Yeah, so one is Korea Circuit, which has been signed recently in the electronics division, where we are bringing up high density PCB boards and semiconductor substrates and flex PCBs. We already were doing single layer, double layer, and multi-layer PCBs in SN Circuit. So we will become a single company in India which will offer the full stack of PCB applications. And secondly, on the railway front, we have done a joint venture with Yujin Korea for the gear, coupler, and pantographs. This is adding the bill of material offerings in the one passenger car. So we were earlier offering only the air conditioners in the railway applications. By adding, we did a TOT last year, technology transfer with the Ultimate Group of Austria for doors and gangways. We developed pantry system on our own, and we have done this JV with Yujin Korea. So earlier we were offering just 3 to 4% of a passenger car business. Now we will be able to offer 15% of the passenger car business. So we have increased the total addressable market by 4 to 5 times within the existing customers.
Sir, I want to understand from you a little bit more about the PCB manufacturing business as well. You've added a new plant in Hosur. Where is capacity utilization there at? When is it going to, and when do you see it at full scale operations? And also in one of your commentaries, you indicated that you stand to gain from the government policies related to PCBs. So what is the growth trajectory on PCB specifically, and where do you see that contribution reaching to your top line?
Well, in PCB, we are very bullish on this sector because if I take you through 7 years journey, what India has witnessed, 7 years back, India was consuming $32 billion of electronics. Last year, India ended up consuming $115 billion of electronics. And this is, as business as usual, is going to about $300 billion by FY 2030. And on a PCB side, 3.5 to 4% is a thumb rule on the electronics getting consumed. So today, India consumes about 32,000 crore worth of PCBs, but unfortunately, only 3,000 crore worth of PCBs are getting manufactured in India. And looking into this, I think Government of India gave the anti-dumping duty notification recently up till 6 layers. And that's the reason why we want to expand the portfolio in India. This is an import substitution. It's a domestic story completely. We are not banking on orders from outside. It is a good leeway, and the Hosur plant of PCB in the SN circuit, we are bringing up new capacities for multi-layer, single layer, and double layer. On the incentive side, it has been supported by Ministry of Electronics IT spec scheme, which is funding about 25% of capital subsidy on the plant and machinery. And we have also been able to receive good incentives from Tamil Nadu government for the PCBs, as this is identified as a sunrise sector by them. So in all, overall, there's an incentive scheme of almost about 50% for the PCBs. That's why we are getting very aggressive, and we want to be a company which completely import substitutes this PCBs for India. And we are very bullish for the PCB sector moving ahead.
Okay. So, Mr. Singh, I heard you mention that you are reasonably confident of doubling your revenues from FY24 revenues by FY27, if I'm not wrong. Is that what you said? And will this happen at consistent or better operational metrics and return ratios, or could there be, over that 3-year period, a bit of a dip as you move to execute and garner top line?
Our guidance of doubling the revenue is for the railway division by FY27.
Okay.
That is what we are
Okay.
looking forward.
Okay.
Our guidance for the consumer durable division is that this year we expect to outnumber the industry percentage growth. We expect that industry will grow by about 25 to 30%, and Amber will outnumber that number in consumer durable. In electronics, we have guided that we will be growing by 45%, and I think I can revise my guidance that we are looking forward for at least 50% plus growth in the electronic sector this year.
Sir, just one quick question. You have talked about very aggressive expansion plans, upward of 5 billion rupees over the next couple of years. And you, like you've indicated, you're adding capacity, and that's the way you're going to grow, right? You've also talked about reducing debt and improving your debt to equity ratio. Should we be expecting fundraising plans from your quarters? Because if you're going to try and do both those things, you're going to need some equity coming in.
Right now, we have guided for the capex of about 375 crore this year. We are not going to raise any money for that. But yes, since we have announced, Korea Circuit JV, we are waiting for Ministry of IT to roll out the incentive schemes. Post that, we will come out with the capex numbers. And if we want to be bold and brave in launching the PCB sector completely for the electronic division, and looking into that, in case we need, then we'll be raising funds. But otherwise, as of now, there is no plans for raising funds.
Okay. Mr. Singh, any other highlight as per what you've done in the first half that we should take note of? We've gotten a great sense from you about the business. Anything else that you would like to highlight before we wrap up?
I think Amber has transformed into a very unique B2B company. We started as a room air conditioner play when we got listed in 2018. Today we have, apart from room air conditioners, we are into components of room air conditioners, non-room air conditioner components. We've added washing machines to our portfolio, commercial air conditioners. Then we built up this whole electronic vertical, which has been built up very beautifully, and very strong vertical which has been built, which is Amber 2.0 story. And in railway, we started in 2019 with just supplying air conditioners for Indian Railways. Then we graduated into metro space. Now we have added bus air conditioning system, some defense applications on the air conditioning side. And now we are going for deep into the penetration of the passenger car bill of material. So all this put together, all the three divisions are looking very positive. I think we have increased the total addressable market into multi-billion-dollar opportunities for each divisions. So we are very optimistic for next 5 to 10 year story. I think it's a complete India domestic story, and of course exports will be all bonus points from here on.
Mr. Singh, great having you. Thanks so much for taking the time out and being with us. Really appreciate your time. Congratulations on a strong quarter.
Thank you very much for having me on the show. Thank you.
Pleasure was
Have
ours.
a good day.
That's Amber Enterprises' very strong showing.